from ATFX, who joins me now. So somewhat more muted moves, and certainly that safe haven bid pulling back a bit from the greenback.
Yeah, certainly. It's been an interesting few days, and some of the moves that we've seen don't necessarily tally with what I suppose experienced traders would say. If you said, right, war in the Middle East, we'd be probably expecting gold to be challenging those all-time highs again, yen to have appreciated, Swiss to appreciate, and we've had a lot of movement certainly in currency markets, and the dollar's been the main beneficiary. But as you probably saw, the Aussie's back up near 71 cents, and normally, as was the initial move, the Aussie took a big hit first thing on Monday morning, but it's been relatively well supported on dips. So there's some crazy moves out there, and I think you've just got to just play the wider ranges for the moment.
So with the ranges, where do you see the Aussie going from where it is now?
I still think in the current environment you have to fade rallies for the Aussie. The dollar strength will continue to come through, and as we know, when the global growth story starts to fade and get hit hard, which it could do still from this prolonged conflict, then Aussie normally takes a harder hit than most of the other majors. But as I said, it's been resilient. At the moment, I think you fade rallies towards that strong resistance that's around about 71.50 at the moment.
You touched there on gold. It's been interesting because, you know, we did see a lot of bid, particularly on the weekend or the following the weekend's airstrikes, but then there was a bit of a pullback, a rebound though somewhat. So what are we at 51.50? Where do you see gold going now?
Well, I still think it's got to move to the top side in the current environment. I don't know whether that's the old school, but even on the initial reaction, I think we went up 2.5%. We finished on the day on Monday only up 0.8%, and then the next day we dropped 5%. So it's a crazy move for gold markets, but I think that could be explained with the moves that we've seen over 2025 and 2026, that there was a lot of dollar buying that suddenly came through. But certainly the classic move gold would be exploding alongside oil. So we've got some strange sort of cross trades that could be played at the moment, like gold oil would be unexpected, I would say. So at the moment, I think you've got to buy dips. That's the trend anyway. We've got geopolitical uncertainty, but it's really messy within those ranges.
And another sort of thing that's not potentially behaving as much of a safe haven is the yen. I would note that we've seen it come back in that sell-off on the Nikkei, also the Kospi this morning, and Eurostoxx 50 futures are up, DAX futures are up. What does that mean for something like the Swissy for their yen?
Well, I think we've had a similar experience in yen and Swiss that we had in gold. So yen, we did see the initial move, which was to buy yen. It was very, very short-lived on Monday morning, and then we've seen it pop up and it sort of challenged those resistance levels up around 158. We have seen a decent move back to the downside. We're sitting kind of mid-ranges now. I still favour probably buying the yen, and the other point we have to take into consideration, of course, is the fact that we're entering that BOJ territory when we're hitting those 158 levels. So there's a lot of factors that could come into play with the yen, but I think I'd favour selling rallies in the yen and yen crosses at the moment.
When it comes to the euro, I mean, European markets higher overnight. Those are reports. Iran is reaching out to the US. We heard what President Trump said on Truth Social. But where does the euro go, not only against the greenback, but particularly against some of those other crosses like the yen that you were talking about?
I think there's going to be a lot of pressure on the euro. So I think it's been the one solid move in FX that we've seen. The euro's come off very hard against the dollar, and it's under pressure on the crosses as well. As we know, the LNG price went through the roof, and a lot of that goes to Europe. So inflationary pressures in Europe, and you know, for a change, rather than inflation leading to the move to the top side in the euro, I think there will be pressure on European economies if this prolongs. Of course, if we do see talks progress soon and a calming in the situation, which could happen, then you're probably going to buy these dips in euro. But a good technical break, and I kind of highlighted that earlier in the week. So now you've got to be fading rallies back up towards that sort of 117.50 level.
And the loonie, the Canadian dollar, I mean, it's kind of acting as a safe haven here too.
It has, yeah. And traditionally, anytime oil starts to move to the top side, you see the loonie move higher as well. It's against the dollar, it's always conflicted a bit, so it's probably more of a cross trade, but it's seen some really sharp moves. That's the daily chart, so it doesn't quite show it as well. I probably should have put an hourly in there, but there's been some really fast and hard moves in the loonie. Obviously, I think at the moment, when you've got some of the bigger banks talking about $100 plus, you've got to see CAD appreciation on the back of that. So I think you fade, even in the dollar, you fade rallies in the dollar CAD, and you probably fade them harder in the CAD crosses.
All right, Always a good time to chat. Nick, thank you so much. Nick Twidale from ATFX with us. That does it for this edition of The Trade. Be sure to join us next time.